China is one of the largest economies today and runs trade surpluses with all three of the major economies of the US, EU, and Japan. Okay, four now, okay, the UK, and many other countries. To be exact, I think 100 other countries run trade surpluses with China. And what does that mean? It means that China sells more to them than China buys from them. So, do you want in on this interesting market? The Chinese stock market now has increased its access to retail investors like ourselves, so we had to bring on someone interesting to talk about this in more depth, to give us clarity on the broader financial ecosystem in China, the stock market, and some interesting investing ideas in the land of the dragon. Welcome to another Chills with TFC session. In this series, we bring on interesting, relevant people to help us learn better from various perspectives. Life is not always about learning from people that you already agree with. Perspectives shape a rounder thinker. So in our pursuit of the life we love or managing our finances well, our guest for today is someone that proclaims himself to be a doctor of wealth. Yes, Dr. Wealth is one of the leading investment communities here in Singapore, and today we have its founder in the house to dig deeper into China, its financial systems, and stock market. So welcome, Alvin Chow. For reference sake, this was recorded in 8th of April 2021, and we will be releasing these Chills with TFC episodes that we believe are very insightful and timely. Early to you, coconuts. Our discussion today is solely for education and entertainment purposes only. It does not serve as any form of advice or recommendation. So thank you for loving what we do and empowering us financially to do more for you. Let's roll. So then you started investing in Singapore markets, right?
Yeah.
Then eventually everybody moves and develop and go abroad and whatnot, right? So in search of yield, in search of growth and what have you, right? So then somehow we all make our way into China. I mean, you get the reality today, right?
Yeah.
But what prompted you to explore this place in China?
Okay, because the way I see it is that the big picture was, when I look through history, is that the world superpower always changes. It's never one country forever, right? So it started with the Portuguese, who really sailed around the world and colonized other countries, right? In the past, before they get to be naval powers, usually they only move around the land mass. So you only conquer your neighbors who are connected by land mass, right? But the Portuguese brought a different story, right? They had these ships that can sail as far as Brazil, Macau, became Portuguese colonies, and then the Spanish, and then the Dutch, the French, the British, which Singapore was part of a colony, and then after World War II is the US, that's a superpower. But interestingly, after the World War II, the interesting part about US is that it doesn't colonize. Okay, but how do they then dominate the world, right? How do you call it superpower when you don't plant flags in other countries, right? So how they do it is they infiltrate to your country using their businesses, using their corporations, or what we call MNCs, right? Multinational companies. And today you can go to any country, you usually will be able to sense or see or witness American company that's there. Okay, and I do think that eventually US would not be the superpower. So who is the likely next country? And that itself, the clearest answer will be China. So that piqued my interest. And when I look deeper and look at the trends, then I felt more confident that, on a larger trend scale, China is the way that, or avenue that, it's good to play some bets, okay? It's not good to not place any bets on it, right? On the contrary, that's where I really started to put more money in China stocks for the past few years, I would say. Yeah, now majority of my portfolio is weighted to China. Yeah.
Nice. Okay, so in the pursuit for yield, you've explored China, right? But then there is a common sentiment that China's a relatively closed market. So can retail investors actually participate in it? I'm sure you've done it. So how do we go about doing it? And what's the idea here?
Okay. First of all, it's not about yield. It's more about the growth prospect. So it's more capital gain. In China, so there are three major markets, or I should say four major markets where the Chinese companies are listed on the exchanges, right? So domestically, it will be the A shares, which are listed on Shenzhen and Shanghai Stock Exchange. And then you have the H shares, which is listed in Hong Kong. And then you have the ADRs, American Depository Receipts, that are listed in the US. Okay, so the more well-known companies from China will choose any of these four exchanges to list. And US, definitely no problem. I think a lot of investors are very familiar with, as well as Hong Kong, right? Investors have access to these two markets for a long time. And the thing is that for A shares, foreign investors used to be forbidden from owning A shares, right? Only until around 2014, they open it up. And how they do it is that they had this Shanghai Hong Kong Connect and Shenzhen Hong Kong Connect. So what they are doing is that they are making use of Hong Kong as an international platform to reach out to foreign investors. So of course, these are their back-end stuff. We don't need to worry so much about it. On our side, we just need to know whether our broker get access to these A shares. Okay, so there are quite a handful of brokers, even in Singapore, based in Singapore. They allow you to buy A shares. So just need to check with your broker. It's no longer that difficult. And we're talking about probably 2,000 stocks in Shanghai, 2,500 stocks in Shenzhen, about 2,005 in Hong Kong. So add together, you have about 7,000. That's excluding the US ADRs, right? So it's a very huge market to talk about. So there are some stocks that are only listed in A shares, as A shares, right? So if you don't buy A shares, you never get to
You never get a
invest in
full
them.
suite of stuff.
Yeah, exactly. Okay, especially some of the consumer products companies that are mainly listed in the Chinese, and I think that this is where the potential is. So enlarging that scope of China companies make a lot more sense.
So what is your percentage, composition like in terms of like being in China? How many percent of your portfolio is China now?
Currently, it's about 60%.
Wow,
Yeah,
okay.
60%.
And predominantly in consumer consumption, or where are we at?
Mainly in consumer products, yeah. Because I think as a retail investor, it's easier to understand the consumer product, right? Being a consumer myself, rather than those B2B companies where it's a lot more opaque if you are not an industry expert. And the second reason is also because China domestic consumption has contributed to the GDP more than 50% of it already. Yeah, so it's unlike the past where they rely a lot more on exports. Now domestic consumption is a major thing, right, that drives the economy. And that's where China also talk about the dual circulation economy, having both export and domestic consumption. That's what they want to grow. So I think that there is a lot of growth area to look at. And given the Chinese super big population, domestic consumption is going to be much larger than what we have seen in the US.
So domestic consumption is a very big word, right? In the sense like that, people consume all sorts of stuff, and all sorts of things. And China is a huge country, so just give us some texture. Help me understand like which part of consumption. How do you see consumption habits change? Because the general idea out there is, China, a lot of people, country growing, grow, consume more. So yeah, okay, I get it. But then where, right? What is it like? What are the habits going forward? Yeah.
Okay, so let's bring an example. Would be Mao Tai. Okay,
Mao Tai,
right?
okay.
So I guess
hate
you
that
guys
thing.
have heard of it before. Yeah, I've never drank it before.
I hate it. But it's very expensive.
Yeah,
Okay,
it's very expensive.
Yes.
I think it's at least 300 Sing one bottle.
And that's the cheapest one.
Yeah, that's the cheapest one.
Guopao, this is
Yeah. And to show you the scale of that consumption, right, is that this Mao Tai is part of the family of Baijiu. Right? It's not the only brand, but it's a major brand in China. Of course, there are second tier like your Wuliangye and all this. But Baijiu is a very big market. Okay, so Baijiu is mainly drank in China, not outside of China. Right? It's unlike your whiskey, your vodka, it's drink around the world. Okay, so in terms of hard liquor consumption around the world, right, Baijiu is the most drank spirits in the world. So that means China outdrank everybody else. Practically, right, by that logic, okay? So that shows you how big their consumption is, okay, to give you that scale. So this is a good example of a consumer product that I like, right? It's the first stock that crosses the 1,000 yuan per share. Now it's 2,000 plus. And it's also have this national title of the national liquor, which was bestowed by Mao Zedong. Right? And this kind of branding you can't take away.
Yeah.
Okay. And even the water is a special sauce that comes from that particular part of the stream of
in
river.
Guizhou, some weird little
Yes,
part.
correct.
Yes.
They tried to take water from upper part of the river, lower part of the river. It tastes different. So there is a lot of this kind of competitive advantage, this kind of branding. When you want to have a very big occasion celebration, right? You put a Mao-Tai on the table, on every table, right? It gives people, a lot of the face value. In China, right? The Chinese have this face value, right? They want to increase this if they can. And this is one example, right? So it will never go away. And as the Chinese become more affluent, they will consume more. Right? Yeah, vices always works.
Yeah, so that's a cultural aspect, right?
Yeah.
And from its core, But like you said, right? Consumption will increase as the consumers can buy more, essentially, right? But with the undertone of understanding how the consumer economy circulates in China, how are we seeing that consumer becoming more powerful in that sense? And because your base case of pursuing Chinese stock is for growth, right? But then if something like a Mao-Tai, I know you bought it a lot earlier, but something like a Mao-Tai is already established and biggest liqueur brand, and it's mostly consumed in China. So then where's that growth in that sense, right? Other than local consumption.
Yeah. For the record, I don't have Mao-Tai.
Okay.
Because I always felt it was very expensive.
Okay.
When I look at it, it was like 1,000, right? So I thought it was expensive. Yeah, but it's a foolish mistake because it went to 2,700. So
that's the whole growth thing.
In
right?
hindsight, you see, sometimes for good growth stock, you just have to buy a bit more. It looks overvalued, but sometimes you have to get in some point in time. Otherwise, you will just get more and more overvalued over time. So that's a good question, right? Where are you going to get the growth, right? So Malta is mainly drank in China. One is that there's a few things that a company can increase its revenue, right? So one is they can increase price. Okay, and that's what Malta did for many years, right?
Because it only gets more and more expensive every batch.
Limited supply because they can't make a lot, right? And then when the demand goes up, the price goes up. And because they are more affluent, they can afford. And in fact, it become a valuable good. The more expensive, the better it is. The more face value you can derive from it, right? So that's one part of growth, that's increased prices. Usually, that's the fastest way, and that's also the highest margin way. Right? Because your cost is the same.
Assuming oil stays constant, right?
Then your price goes up by 10-20%, right? You straight away increase your margin. That's always the lazy way to grow the business. And then second is that I do believe that eventually China will export their influence to other parts of the world. Even you realize now, we go around Singapore coffee shop, you see like the mala xiangguo, right, popping up here and there. People are consuming that. And if you look at history, right, Japan, when they export their electronics throughout the world, they don't just export their products, they export culture. That's where, we start to watch animes, we start to eat sushi, right? All this kind of Japanese culture start to filter in. Okay, so companies don't just bring products, they bring along culture, and that infiltrates and changes or mash together into a melting pot of different cultures. Korea did the same thing, right? They didn't just sell you Samsung.
They didn't just
phones.
dance. Then they dance.
They give you K-pop, right? So
K-drama and ruin
exactly.
every single person's probability.
Yeah, exactly, right. So I do think that China will eventually bring more and more culture here, and for all you know, Malta will increase in consumption, right, outside of China, and that's a much bigger market. That's why we talk about that superpower status, that MNC effect, that cultural imports or exports from China. US did it a lot, right? Especially the Hollywood, culture, all these kind of things. Infiltrates to music, right? Spotify, a lot of China music. Last time, Chinese music mainly come from Hong Kong, Taiwan. Now it's coming from China.
Yeah.
Right? So that is what I see as inevitable.
Yeah. By the way, in China, they don't really eat xiangguo.
Yeah.
So I have not really seen xiangguo while I was living there. Not in Sichuan, not in Chengdu, not in Shenzhen.
Yeah.
It's like, but it's
it's an evolved dish.
Yeah, evolved version, like
dish.
mookata, right? Yeah, it's the same idea. Same idea.
Like even Chinese rice, Chicken rice, not Chinese rice. Chicken rice here is different from the wenchangji in Hainan.
In Hainan.
Yeah, it's different, right?
Okay.
So there's a little bastardization that's going on.
Yeah. It happens everywhere. Okay, so shout out to all you Mala Xiangguo fans. But then, in that sense of that is one kind of consumption trend, right? The premiumization, and essentially people become more affluent. They want the status. So that's one kind of consumption. What other consumption trends are you looking at? Without you don't drop names lah, but you just kind of see where this is going.
Plenty lah, right? So you get a clue is what you buy every day, right? So and what is in your home, and one company that I like is the air conditioning company, home appliance company lah. But they are known more for their air conditioning. They are a very successful company in China, number one in terms of aircon sales, right? And in China, they are busy building a lot of homes, right? Building a lot of homes. And now they want thermal comfort, they want the highest standard of living, and they all want air conditioning in their houses, just like us in Singapore. Okay? But the number of houses they have is dwarf us, right? Totally. Okay, so that means the demand for all this air conditioning is huge. Okay, that makes them one of the largest enterprises in China, and they also do commercial spaces, right? Not just the domestic one. Like our Jewel, Changi Jewel, they chose Media as their aircon provider rather than any other brands, right? That says a lot. Okay, and that means that they are pretty successful in also growing outside of China. And now you start to see a lot of advertisement on cabs, on buses, and you can even buy a Media aircon today at any of the major electronic home appliance outlet. So this is another thing you can look at, right? Because in terms of aircon players, there aren't many in the world, right? Not as many as other consumer products, I would say. Right? So competition is not that strong. Yeah.
I think they've managed to brand themselves unlike a Chinese company, right? So the very Japanese vibes, the way they build it. So I think quite interesting the way they kind of ride through global cultural acceptance, right?
Yeah.
Because there's still that little tinge for it.
Yeah.
And so then in that sense, a lot of people when they look at buying Chinese companies, right? The big names always come out, right? Alibaba, Jingdong, whatever, and mostly tech platforms, which are popular everywhere, right? And they have the kind of reach. But then you're going for very real consumption, very core appliance kind of stuff, right? What is that divergence there? Or do you also own the tech, guys?
I also own the tech like Alibaba, Tencent, the likes of it. Of course, if they are trading at a good price, right, which Alibaba is. So
not a tip, guys. This is purely for education purposes. Please don't take it as advice. But
it's just that I find that consumer brands are stickier, right? Whereas tech, you really need to keep up. The innovation cycle is very short, right? You talk about Tencent being the social media champion in China, then suddenly you have Kuaishou, you have Douyin.
Yeah, Douyin.
Just like less than 10 years of dominance, you suddenly have new competitors threatening it.
Yeah, Weibo used to be a thing.
Yeah,
right?
exactly.
I mean, it's still a thing, but finances, it looks like shit anyway.
Yeah. So it's getting more and more crowded.
Yeah, crowded.
Basically, right? So whereas in the consumer branding space, right, it's very, very difficult for a newcomer to come in. Very, very difficult. Not impossible, but it's very difficult. Like, how are you going to create another Baijiu brand to beat Moutai? Okay, it's very, very tough, right? Charlie Munger used to say this, right? That the mouth is a very sensitive place. You don't put foreign things in your mouth, right?
Yeah. Foreign things in your mouth. Yes.
Exactly. You're very, very sensitive, right? You won't anyhow put things that are not that
you don't like in your mouth.
You don't like. Yes. Okay. So if you are used to one brand, you will keep having that brand. Okay. Yeah. Not a sexual thing. Okay, but. No sexual connotation.
Yes. We profesh.
And
sweat.
Yeah, things like multi harder to change, right? Because people stuck to it. Okay. Whereas you switch a platform might be easier.
Okay.
There are a lot more like soy sauce is also something that I think is integral to the Chinese culture. So something like a Haitian brand is also very sticky. people always seek that kind of familiarity. Right? If they buy the kind of soy sauce, likely they'll keep buying the same soy sauce over and over again. Right? They won't change.
Okay. So what you're telling me, all these consumption brands and essentially consumer-driven companies, they are mostly listed as A shares in Shanghai and Shenzhen. That's what I'm getting.
Yes.
You don't get it through the ADR listings, which are
No.
in the US. You don't get it in Hong Kong.
No, Multi is only A shares. Haitan is A share. Media is also A shares. Yeah.
So in that sense, it is a discussion between access and not so much in terms of like what are the risk factors, because people get a little bit jittery in the idea that, like invest in China, then it's like you got to hold in renminbi and all those kind of stuff, right? So give us a little bit of texture to understand, where do we find comfort in this, where it is relatively still a closed market, in terms of the currency and the financial markets, and why are you so okay to put 60% of your money in China in that sense, other than the growth story and all those?
Yeah. Current currency exchange risk will always be there. Even let's say you buy a Singapore company, right, but it has businesses in China and US or whatever, you will still get the currency risk. Just that it's embedded in the company. You don't feel it.
Not as open. Yes.
Yeah, you don't feel it, but it doesn't mean it doesn't exist, right? So that's one. You can never eliminate it. Second is that it's the same if you invest in US companies predominantly. I do know there are some people who just whack everything US, right? So you get the US currency risk as well. But I think for major currency like USD, renminbi, or even euro, there's no need to be so fearful about it. And also you don't need to hedge it, okay? Because the way I see it is that the good thing about Sing dollar is it's hedged against a basket of these major currencies, right? How MAS does it is they manage the exchange rate with a basket of currency, which is not disclosed, but they did give you a hint. They say it's against major trading partners. And China is definitely one of the major trading partners of Singapore. And that means that renminbi is going to be quite a big weightage in SGD basket, right? And that means that I see it as MAS have already hedged it for me. I do not need to do extra hedging. Okay, and when you look at the history of renminbi versus Sing dollar for the last 20 years, it has been very stable. It's been range bound. So that tells you that, or that can assure you that it's not going to be a problem, okay, in terms of currency exchange risk. And if China going to be the major economy or the biggest economy in time to come, the currency is going to be more important, right? So in fact, you look at the reserve currency percentage, renminbi has been growing the fastest, right, compared to the rest of currencies. So I do think that it's not a big concern for me.
Yeah, fair. Okay. So essentially, you're not concerned because you feel like MAS has already done the balancing act, with the basket weightage kind of thing. But then, hedging is a thing that's being thrown around. Like people keep saying you got to hedge, right? So I'm just kind of curious, like, how would you hedge, if you want to do hedge? Because there are all these tools out there, and not all are, open access to retail guys, right? So just want to get a little bit of your take. If I'm a retail individual, I want to hedge against a certain thing, what would you do?
Okay, so first of all, I don't encourage hedging is because it's very complicated. Most people do it wrong, and they end up losing more money than they who have not hedged at all. Okay, but let's say if you really want to hedge, one of the easier way is you go and short like the renminbi. Right, so there are a lot of forex brokers out there. So you can take a portion of position to short against renminbi. So if renminbi really devalues, then your short position will make money. So that's how you hedge against currency risk. But it's very dynamic. Your position sizing must be calculated very well, and you need to adjust that position regularly, right? And that's why it's a nightmare. Most people will just do worse, so don't bother.
So don't bother, just take a break, let MAS do its thing. Okay, that's cool. So in like all big countries, right? Much like China or US or anywhere else, growth is not consistent. So a lot of Singaporeans think like everywhere is the same, right? Like oh yeah, everywhere is the same. Growth is homogeneous around. But in China, there's a lot of coastal cities, right? Those are the big the big consumers. Beijing, Shanghai, Beishang, Guang, right? Essentially these three places, and Guangzhou. Are you concerned about their consumption habits and how that trickles differently into the inner cities? That are non-coastal, and how do you see that play out? In terms of trends and all.
Definitely, the consumption is mainly from the coastal area. Besides the three cities that you mentioned, there are many other cities, your Hangzhou, all these places, even Foshan. they are pretty high in terms of their living standards.
Foshan is the who's that?
Bruce Lee.
Yeah.
Bruce Lee.
And the Hong Fei Hong
Yeah.
is from Foshan.
Exactly. So a lot of kung fu stuff there.
Yeah, a lot
right?
of kung fu stuff. Yes.
Yeah, but they have big companies. Media is from there.
Oh yeah.
So
okay.
they have very successful enterprises, businesses, and their overall standard of living around those areas are pretty high, right? It's not that low. And they're also building or designating areas like the Greater Bay Area, the GBA. They're going to have like a metropolis connecting all the cities together to make use of multiple cities to grow to a bigger region like San Francisco Bay Area, Greater Tokyo Bay Area. So they steal that concept from.
But this bay is way bigger. Just saying.
Yeah, exactly, right? So it's way bigger.
It's like
so
five cities string together called a bay.
Yeah, that means that even actually I think it's about 13 cities. And that means that the coastal areas still have a lot of growth, right? I think that in fact the most of the growth of China will still come from coastal area. Unlikely it's going to come from the inner cities, which means there is a problem of rich-poor gap.
Yeah.
And in China it's very stuck. Okay, that's a funny thing, right? It's supposed to be a communist country, but the rich-poor gap is wider than
Anywhere
US,
else,
which
yes.
is a capitalistic society.
Yes,
So
yes.
that's the irony,
Yes.
right? I don't know how I'm gonna solve that. That's beyond my pay grade. Okay, so that's not my league.
Not my favorite.
Yeah. So but the inner cities does have some economic development. It's not that without, like Kuaishou has brought a lot of the influences from the inner cities, and they also try to have that kind of supply chain where farmers in the inner cities, western part of China, can transport or sell their crops, their
Direct to
produce,
consumer, yes.
right, to the coastal area. And they also have like sister cities. Okay, they match one inner city with a successful modern city, and then they try to work together, see how they can bring them out of their poverty. So that's what they've been doing. I don't know how successful it is going to be, but I do think that majority of growth will still come from the coastal area. Unfortunately, that's how it is. The rich gets richer, right? They have more resources to grow, and all this GBA, all this will just increase the activity, right? And even eventually, when tourism come back, people will still visit the coastal cities more than the inner cities. So that's how it's going to be, but yeah, China may have a very bad rich-poor problem to solve.
Yeah. So on the grounds of rich-poor problem and it being very bad, right? Because the picture now that you're painting, and a lot of people are painting, okay, maybe not everyone, like mainstream media, maybe not so nice to China, but if you look at the numbers, you look at the financials, if you trust the data, a lot of growth, a lot of prospects, and things are looking good. But then what are some of the risk factors, like one of which is the rich-poor gap, right? That creates instability from a social ground, right? So what are some of these risk factors that you think people need to be very cognizant when they invest in China? How is it different?
The thing that is bugging China, if you bring in the context of US, is that China domestically, they are not that stable. Okay, they have flashpoints, right? Because they are not as homogeneous as the Americans, right? Why I say that? Because Xinjiang has always been a problem.
Always.
Okay, ethnically, culturally, they are different, right? They're not homogeneous at all. It's almost like it's another.
There are more Turks than Chinese.
Yeah,
yes.
exactly. But that somehow they are within the boundaries, right?
Not somehow, it's war. Okay.
So you have to assimilate.
History. Yes,
yeah, you have
yes.
to assimilate them to, but you cannot force them to change their
Yes,
culture. It's not
yes.
possible. Or change their religion,
Yes.
and that's one area. You don't have such problem in the US, right? Tibet, okay, wants to be autonomous. Don't want to be under the Chinese politics, right? Taiwan is also a problem. Okay, so you can see they are all around China, at the fringes of China. So in terms of all this kind of political stability, China is not as well positioned as the US, right? All the states are pretty much the same. Okay, and another thing is that their neighbors are not friendly. Chinese neighbors are not friendly, right? India is not friendly. They have flashpoint at Kashmir. Japan, not in good terms, right? A little bit like, I don't know, frenemy kind of situation, right? Sometimes I'm friends, sometimes I'm an enemy with you.
Yes.
Right?
Yes.
So, but definitely I would trust you.
We're
100%.
like trading partners. We can trade,
yeah.
but we're not friends. We're not
Yeah,
allies in
yeah.
that sense. Yes.
Vietnam, okay, Vietnam hates China, right? So you can see again it's around China. So that means that if, let's say, China go to war, he has a problem, right? Because everybody surrounding China is a foe, almost. Only the western part, the Central Asia, they have more friends. Other than that, everybody surrounding them, they are enemies, right? So I always like to see that China have friends afar but foes nearby. Okay, and in US it's different. Friends up north, your Canadians, friends down south, Mexico, they all dying to go into America, right? And they are protected by your Pacific Ocean, Atlantic Ocean. To attack US is very, very difficult, right? To attack China is a lot easier because you have a lot of enemies waiting to let people use them as an avenue or conduit into attacking China, right? So you can see that in terms of geopolitics, this is one major risk I see in China, right? It's not as solid in terms of securing a home-based defense as what US has experienced. That is why the biggest threat to US territory in the past 100 years was only probably two times. First was during the Cuban Missile Crisis, where the Russian
Essentially,
nuclear bomb, right, was within range of the US launch. And that's why they are so uptight about North Korea, because they are claiming that they have a missile range that can hit the the USA.
In Alaska, right?
So they are very clear what is the major threat. Is all these intercontinental ballistic nuclear bombs, right? That is what threatens them. It's not all your traditional naval forces, not your land forces.
You
it's not. They
can't
are
fight the
they are
US.
impregnable from
Yeah,
that
yeah.
point of view.
I think they have like what 30 huge ass aircraft carrier.
Exactly,
and whatnot.
exactly.
Yeah.
And they are protected by the oceans, right?
Yeah.
So ocean is flat, your radar can see enemy forces way, way before anybody else. And the second time the US faced a threat was terrorists, right? Where they flew a plane and hit America.
I don't think that's a threat. That was like just
Yeah,
it
but,
happened.
but they want to prevent this from happening.
Yes,
they really
yes.
whack the Middle East,
Yeah,
right?
yeah.
So you can see the whole US focus where their defense is. Okay, is about neutralizing all these long-range threats that is hitting their soils. Other than that, traditional military force would find it very hard to touch US. But China is a different story. Yeah.
Okay, fair. So that is the external force, right? Which I get it. It's like what you brought up, right? In a very brute manner. It's like, yeah, all the enemies around, a lot of trading partners, no friends. But then from an internal cultural standpoint, from a political standpoint, what are some things that, if I today want to invest in China, what do I need to know? Because, we know so much about what's going on here. We know a little bit more about what is happening in the West, like how they do it, because media is, they talk about it, right? But then if today as an investor from Singapore, when I look at China, all these growth stories, but what are some like nuances that I need to know that's different?
Definitely the value system is different, right? Political system is different, okay? The thing about investment is that it's very difficult to be 100% impartial, 100% objective, right? We will bring in some of our biases, our value system into the kind of investment that we do, right? It's natural.
Yes.
And the thing that a lot of people have with China problem is they don't like a communist government, right? They feel that they control everything. There's a lot of censorship. That is a value that is in conflict with the Americans, right? Americans is I want liberty, right? I want freedom of expression. Okay, you can say whatever shit you want, right? I may not agree with you, but you can say it. Okay, it's acceptable that you can say it, right? But in China, it's not. If you say something I don't like, I will censor you. Okay, the cancel culture, whatever, right? So
like Winnie the Pooh.
So to some investors, right? They probably their value is closer to the Americans, right? The freedom of speech must be preserved. I should not be shut off. Okay, and when they look at China, they say this is a criminal government. I don't like them. I'm not going to invest anything about China. So that's what I mean. You bring in your personal value into your investment process, right? And I think this is natural. You cannot prevent this, right? Because if you go and invest in it, right, you will hate yourself, right? Which is a very unnatural thing to do. so I do think that there is a lot of misunderstanding regarding this, right? Even when we talk about this freedom of expression, it's not just a political system thing, but it's a cultural thing. Okay, because the Angmo has this culture that individualism. They really see the importance of having that individual, right? After you reach a certain age, you're supposed to kick him out of the house, and he's gonna live on his own, right? That kind of independence. Whereas in the East, during the Confucian period, that kind of culture has really been fostered, that you're supposed to live in harmony, right? You're going to respect elders. You don't say things that people don't like to hear in protecting the harmony in their group, right? So you see, it manifests into even the entire country, into the political system as well. So that means that when you look at Chinese companies, you have to evaluate their behavior based on Chinese values. If you use American values to evaluate Chinese companies, then you will find a lot of conflict. But actually, to the Chinese, this is the way. This is my way of life because, I don't know, thousands of years, it passed down from my ancestor. That's how we're supposed to behave, right? To the Angmo, it's like, this is not acceptable. This is suppression. Right?
Yes.
So, same thing, if you use Chinese values to look at American companies, it's also wrong, right? You have a lot of conflict. Wow, why are they so aggressive? Why are they borrowing so much money? How are they going to pay back, right? They're not prudent at all. Why are they doing all this, like, how you say these kind of things on media, on social media, without filtering? This is very irresponsible. You know, so you see, you have very different kind of opinions coming out. So basically, what is happening right now, all this US-China trade war, it boils down to a difference in value, right? Really to the core, to the root of the problem. They were just brought up differently for thousands of years. And now they are vying for that top spot, okay? Which means when you get to the top spot, you get to propagate your values.
Yeah.
And that's what they cannot accept,
Yeah.
right? And that's why you have all these arguments. So I do think that if you really want to look at Chinese companies, you do need to look at them or evaluate them based on the Chinese system, the Chinese values, then you will have a better appreciation.
Nice. So if let's say I want to start investing in China, how would you recommend I go about doing this?
Read Confucian, Analects. I'm just kidding.
cultural first.
Of course, the easiest way is always buy a fund that invests in China. ETFs has been a very simple and accessible way for most
Very
people
cheap,
to do
very
it.
affordable,
Yeah.
yeah.
So like iShares MSCI China ETF is pretty broad. It covers all the four markets we talk about, whether it's US ADR, H shares, A shares. It covers everything. So you can just buy one ETF, it solves everything. Yeah. You have your multi, you have your media. It's all inside.
Everything. Okay.
Yeah.
Cool stuff. Thank you. Thanks for coming. I hope you guys learned some good stuff today. And by the way, Winnie the Pooh is a reference to Xi Jinping. If you didn't know, you can go and search about it. Okay. Winnie the Pooh is being banned in China.
Yeah, this podcast can never be broadcasted in China.
Yeah. Because we use Pooh. Okay, anyway, take care. Have a great day. Bye, guys.
Okay, thank you. Thank you for having me.
Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the Financial Coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. Join our community Telegram group, follow us on our social, sign up for our weekly newsletter. Everything is in the description below. And if you love us, want to help us grow, definitely share the podcast with your friends and on your socials. Also, if you have some interesting thoughts to share or know someone that you want to hear more from, reach out to us through hello@thefinancialcoconut.com. With that, have a great day ahead. Stay tuned next week and always remember, personal finance can be chill, clear, and sustainable for all. Okay, so I have three questions that I ask every single guest.
Yeah.
And the first question is, what is a core life principle that you hold on to?
Okay, one principle I hold on to is that just do it first, then think about it later. Right? So it's almost like fire first, then adjust later. Right? I know a lot of people will say plan something, then after that you go and execute it. Okay. I think it depends on what kind of personality you are, but for me, I tend to be the more cautious kind. So one principle I hold dear is that I always remind myself I must act fast enough. Don't think so much. Right? I tend to what if, right? Just do it first. Okay. Sometimes it's not as bad as what you think it's going to be. Okay. So that is one principle that I really hold on to. And I think that a lot of things in life, in business especially, right? Even now, the culture about being an agile company means you go and do first and you keep iterating. Okay, don't be like very traditional company. You work plan. After that, you still got sub-planning committee. Then after that, you come back together
Risk
with another big plan.
management.
Yeah. After 6 months, nothing is done on the ground. You're still planning. And by the time you roll out something, your competitors are already out there selling your products.
Yeah. Okay, cool. Take action. Number 2, what is the personal finance advice that you feel needs to be further propagated?
I think it relates to the first, the principle that I mentioned about, right? That just act first. Okay, I think a lot more people can invest more. A lot of people can care about their finances more. But I know that it's not natural, right? Because we don't wake up to say that I want to buy insurance today. I want to invest my money today. We wake up, hey, where should I eat today? Where should I go today? Where should I play today? Right? So in terms of personal finance,
If I wake
think,
up, it's like, hey, what insurance to buy today? I'll be quite funny.
exactly, right? So that means that, you just want to get it sorted out as soon as possible. Right?
Yes,
Just
yes,
go and act on it, and you can just let it run in the background. Okay? But the most important, if you do it first. If you wait until 10 years later, 20 years later, then you act, right? Usually people will say, I should have acted earlier. Okay. And sometimes we meet some of the investors, they are like retirement age, or near retirement age, like 50 plus. Then say, hey, I haven't started investing. Then, time is a very crucial factor for investment to grow. And having less time, there's very limited option you can do.
Nice. Okay, last question. Which part of your life are you giving additional focus on now?
I think definitely the business part a lot more, because as I shared through a story, things have become more and more serious, and I have to really concentrate and focus on growing it, right? To keep everybody happy, right? Customer happy, staff happy, shareholder happy, then I'll be happy, right?
Yeah.
So it's really focusing a lot on the business, a lot of my day-to-day life.
Nice, that's cool. By the way, for all you who don't know, because you probably can't see, Alvin came in clutches. So yeah, thanks for coming in.
Yeah,
Take
no
care.
worries.
Stay
Life
healthy.
goes on.
Yeah, all of you, all the best. Take care.
Thank you.